All right, everyone, welcome back. We are going to look at ACH really quick. So, a lot of you guys are wondering if you should stay in or get out. So, the only thing I could really do is point out what I see on the chart here. At first glance, it looks really good. You have higher highs, higher lows. The MACD had a bullish cross here. It's going vertical. RSI is going vertical. So, it all looks good. The Heikin-Ashi candles are printing deep green here. So, it's trending up. It has the momentum at the moment to move up. But a couple of things I do want to point out. First off, I don't like the wick here. There is still over 3 hours left on the candle here, so you can still get bought up and just blast out of here, of course. So we'll look at that first. We'll look at the upside move. If you decide to leave some on the table, I personally, not financial advice, I would take 25 to 30 to, just I'll take a percentage out and take some profit. And don't let everything ride just thinking this thing's going to go to the moon right now, especially with inflation not going anywhere and the economy in the world and everything that's going on. I wouldn't let anything ride. But with that said, you can see you're getting stuck right now at this 272 here at 2.1. So if you can get past this again, you can see we did wake up to the next resistance at 2.4. You're looking at about a 13.5% move if you get over 2.1, and 2.4 if you get over that. Your next stop is 2.9, pretty much 3 pennies up here for a 35-36% move. So I'd watch those couple of prices to the upside if you in fact did not top out here and you do move higher. One other thing I want to point out, you can clearly see it on the chart here. We do have bearish divergence on the RSI, so that's a little bit concerning there, that this may be your top. This wick on this candle, this bearish divergence here, has me a little worried that that may be your top. So that's the reason I'm making the video, so you guys are aware that this could very well be your top, and you potentially are going to drop back down here to this 0.17 level. That's about a 20% drop, and we'll go ahead and measure it really quick. So if you come back down here to 1.7, you're looking at about a 20-21% drop. And then your last line in the sand, in my opinion, if you do not catch the moving averages, the 21 at least, you're looking at 0.142 for a 34% drop. If you end up losing that, then that's your top, and we're going to come down to way lower prices. But you can also notice you do have your 200-day moving average and your 50 moving and coming in hot here. So if you pull back, you're looking at a 20% drop down to 1.7. And then your last line of defense down here is 1.4, where you have all this support with the moving averages down here. So just watch those two prices if it in fact does come down. But like I said, if I was invested in ACH, I would take a little bit off the table and just let some ride to see if it does go higher. The last thing I do want to point out, well, let's look at the Heikin-Ashi candles. I think we looked. I'm not too sure. They're printing deep green right now, but that could change at any moment. So it's trending up. It has the momentum up at the moment. RSI, it's going vertical. The MACD has a nice bullish cross there. So it looks like it wants to push higher, but you have bearish divergence. So just keep that in mind. This could very well be your top. One last thing I do want to point out. You are at macro resistance here. You can see we wicked up twice to it here back in July. And then we got stuck at it back here all in May. So just be aware that you're at macro resistance, you're at the resistance on the Fibonacci chart, and you have bearish divergence. So just take all that information as you will. And with that said, not financial advice. Thanks for watching, everyone. Peace out.